Wharton School of Business. And Jeremy, we spoke with you just a week ago today. At that point, you laid out some pretty significant concerns. You thought that there would be more pain to come, that we could be talking about the S&P into major correction territory and the NASDAQ into bear market territory. We haven't seen either of those things happen yet, but are you still standing by those potential predictions?
Yes, and let me tell you what my concerns are. And by the way, Becky, you had an excellent discussion at the top of the 7 a.m. hour about, what should Powell do about rate hikes. Here's my basic problem. The Fed says the long-term Fed funds rate on normal conditions is 2.5% with 2% rate of inflation. If you take a look at their dot plots all the way to the end, and they've done this for years, 2.5 is considered the normal rate for the Fed funds rate. Now we have 7% inflation. And by the way, next week, we're going to get another inflation announcement. I expect it to jump even further above 7%. How does 1% stop 7 when they say 2.5% is consistent with 2? In addition, Powell admitted in the last news conference that we have one of the strongest labor markets we've ever had. Combination of strong labor markets, combination of 7% inflation. It seems to me that we've got to jump the Fed funds rate much more than what the market is expecting. I don't think the stock market is fully prepared for that. And that's why I think there's going to be some more rocky times ahead. Now, that said, I haven't sold my stock. I have some cash. Market goes down. I'm going to make it work. I'm positioned more towards the value stocks because I think that they're going to resist the rate hikes better than the long duration stocks. I'm not bearish about the stock market. Long term, I still think it's very fairly valued. I just think that we got to be prepared for a much more aggressive Federal Reserve.
So
I wish
you haven't been tempted?
I often,
like you haven't been tempted to buy in just with the lows we've seen. I mean, with the sell-off that we've seen.
I'm waiting for a bit more, maybe 5% to 10. I do not try to do short-term manipulation in the market. I try to look at long-term valuation, and I see long-term valuations as being reasonable. I don't see anyone should panic, even if we have another 5 or 10%. I'm just saying that it seems to me, could the Fed say 2.5 is a normal Fed funds rate in a 2% inflation world? And when we have a 7% inflation world, we're afraid to raise it to 1 or 1.5. I mean, I'd love Steve Leisman, I guess March 16th is our next one, to ask Chairman Powell that question. Those are the inconsistencies that worry me right now, that the Fed is going to catch up with what they say is reality.
Yeah, Jeremy, maybe Jim Cramer was kind of pointing to that. If he thinks that potentially you could see inflation come down a lot faster. I mean, Jim was just saying it's a lot easier to hire, at least in New York City right now. Maybe you see that come down. It's understandable to go back and forth and look at what's already built into the pipeline and look at the idea that even though people have seen their wages go up, it hasn't kept pace with the inflationary pressures. So people are actually having less purchasing power overall. And that's something Jay Powell pointed to, too. I'm sure he's concerned about that. But could you see inflation come back down? Maybe not as drastically as like Omicron has dropped off, but could you see it come back down sooner and more quickly than a lot of people anticipate?
I don't think it's going to come down that quickly. And I think what Jim said was that wages have definitely gone up in terms of trying to hire. Productivity has not gone up enough to cover, not a doubling of wages, but even 10 or 15, 20% increase in wages, which is what new hires are often getting at the low end. And I think a lot of the white collar workers that are on these yearly corporate are going to say, hey, listen, I'm not going to be satisfied with the 3% wage increase when, inflation is 7 or 8%. You're going to have to catch up at least to keep me whole. So I think most of the inflation, and I know Jim believes most of it is supply side. I think most of it was just too much money, too much stimulus. It will end. but I think we got a much bigger bump of that inflation and hump of that inflation coming towards us over the next couple of years.
Yeah, that is the fear in a lot of markets at this point right now. Professor Siegel, good to see you again. Thanks for joining us, and we'll keep checking in with you as we continue to move down the line here. Thank you.
Absolutely. Thank you, Becky.
Let's take a quick final check.